Okay, good afternoon, everybody. Welcome to the weekly take on the market. I will be your host. My name is Scott St. Clair. I'm the manager of the premium product group here at Investors Business Daily. A little bit about me. The disclaimer: we don't make buy, sell, hold recommendations. I can't tell you how much stock you should own, how concentrated you should be, which moving averages you should use. I'm not licensed. We don't have anybody at IBD that's licensed to do that. These webinars and videos like IBD Live, they're pre-vetted for compliance, which is why this disclaimer slide is so important. Allows us to speak a little bit more freely. I do have skin in the game. I have been investing for a long time and definitely um, play along at home like you guys do. So that being said, let's jump right into it. Overall market thoughts. We'll do industry groups, we'll do stocks to watch, and quote of the week. And I mentioned last week that I didn't think it'd be a very long video, and I was mostly right. It feels like this week was just like a non-event, although we did have the Fed meeting. So it's very strange to me why I would have thought that. Going into this video, I was like, gosh, what am I going to talk about? It was kind of an uneventful week. But I forgot about the Fed meeting on Wednesday, although the market, had a good day. It didn't seem that kind of out of the ordinary. It seems like the market tends to go up on Fed days pretty regularly lately. So we'll go through all of that, and don't have any slides. Sentiment is there's a lot of sentiment that's bullish out there. Those are the slides I had last few weeks. It's the same story, and the problem with bullish sentiment is it tends to last a lot longer than the bearish sentiment, so it could go on for a while. Let's jump into the indexes. So here is a chart of the NASDAQ, and I guess that bar right there is Wednesday. The NASDAQ was up 1.25%. And, I've mentioned this moving average 100 times in the last few videos, and it just will not close below that. So I think it's pretty simple at this point. If you want to be cautious or bearish, the first step should be a close below that. Market doesn't like to go down. The next step would be, 3 or 4 closes below that. And then next would be like a weekly close below it. And so, market's charging higher here, respecting this line perfectly. It hasn't gotten to that line. So a little bit about how these moving averages work. You see it comes down, come down a little bit, come down a little bit, come down a little bit. This is a 50-day moving average. So every day you're dropping off one data point, adding another one. Whereas on a weekly chart, you're only dropping off one every 5 days or every week. And as the market trends, this weekly line will go up and up and up. And it looks like it got close to there, but in real time, it's never really quite gotten too close to that 10-week or 50-day moving average. The relative strength is very interesting. It topped in 2021 there. You had a relative strength divergence there when the market made a new high, but it didn't. And I've talked about that previously. That was a very good signal to be negative or cautious or both. And then it's never quite caught up to the S&P. It is on an index level, truly a handful of really good names. So that might explain it a little bit, but I think at this point you just keep it pretty simple with the indexes. It's a bull market, it's an uptrend, it's whatever you want to call it, and until proven otherwise, just leave it be. Well, this is the 600. What do I want? The S&P 500. No closes. Never even got to the 21 day on this one. The Russell as the IWM. It just chops around. Looks good, pulls back, looks good, pulls back, looks good, pulls back, looks good. Very interesting today. I don't know. That's a weird day for me. Oh no, I'm sorry. I thought it was down 2.8%. is down $2.80, 1.35%. Not quite that bad, but I think the indexes were up. When I say indexes, S&P barely, NASDAQ, and IWM was down. So I just don't have a lot of thoughts on the indexes at this point. There's not much there to interpret. Just wait for something to happen. Okay, industry groups. Let's go open stock ideas. Weekly review, 197. Number one group, computer software database. MicroStrategy probably needs to be regrouped, and we are working on a project to regroup the industry groups. MicroStrategy is basically a Bitcoin proxy. I know they have a software database business, but it pales in comparison probably to their Bitcoin portfolio. Oracle is in here. So, but I'm guessing MicroStrategy. And if you want to know the stocks in the group, you just open up this panel. Let me turn off my camera so you can see. Choose, I'm sorry, let me double click the group. I was in the wrong group. Open up the panel. You've got the overview. You've got the stocks in group sorted by market cap. Oracle is the largest. MSTR is second largest. And then if you wanted to dig into the group, you could click this button here, show all component data, and you'll see CVLT, data storage, etc. down below. Now, the way it's sorted in this list panel is based on the EPS and RS rating combined. So 95 and 92 is 187, 99 and 81 is 180, and so on and so forth. So we combine the EPS and RS rating, add those two together, put the largest number on top. So ideally, the types of stocks we would be looking at will be at the top of this list. So if the group is deep, you don't have to go that far. If you can, I always like to say, if you can't find anything to buy in the first 10 or 20% of the names in this list, I don't think you're going to see much down below as far as the types of strategy that we like to employ. So back to the industry groups. Apparel, shoes, Deckers, on had a nice shakeout and came back pretty good. Nike, it would be in that group too. I don't think Nike had much of a day on earnings. I have to admit, I don't follow Nike too much. Kind of big and not growthy enough for me, but I do hear about it like on Twitter or something as far as the earnings. Semiconductor, building maintenance, semiconductor again, leisure movies, that's Netflix. This group's moved up the food chain. KSPI has acted incredibly well. That was that Kazakhstan one. Building cement, computer data storage. So same story with the groups. I like the makeup of the groups. It's pretty diverse and it's growthy in some areas. So there's names to get excited about. All right. So let's jump into the stocks. Let's start with the usual suspects. NVIDIA, beast mode. I can't recall. I'm sure it's happened before, but you'd be hard pressed to find a big cap stock break out of a base and go up 2, 4. Well, here, why don't I just let the tool do the work for me? 11 weeks in a row. 11 weeks in a row. Pretty amazing. Sometimes it's just don't outthink it, That's the best strategy. So NVIDIA will pull back one day. It'll test these moving averages one day. I'm not certain if it doesn't have to go to 1,000 first before it does that. That's the only kind of question at this point. Microsoft, right? And these earnings lines are it's like David Ryan said on the Founders Club event we did the other day that this, the stocks are they're like a magnet. They're gonna follow these earnings line. And look at the earnings line for Microsoft and the price. The wiggles along the way, but in the end, they all follow. They have good earnings lines, nice growth. They tend to stair step higher and higher and higher. And then you've got the Nvidias of the world where it's going down. Stock is anticipating the lack of earnings or the lack of growth, and then the stock starts to anticipate the earnings changing, and it's this at this point when you get these kind of changes on the line, that's what's most important. ELF, right? So moving along, and kind of it's very subtle, but you can see how it's there. You can see a lot better, more clearly there, right? The earnings are doing this, and now they're doing that. And guess what? When the stock breaks out, and then the earnings continue, and then the earnings actually accelerate a little bit at that point. So that's the value add of that earnings on. I really like having that on there. And then you've got like, think about it in reverse. So like Tesla's earnings line tries to recover and down, and and eventually we're going to have projections. You can kind of see what the analysts are estimating. I would guess that it looks something like that, even further down for the next quarter. Or you could just go look here, Scott, and see that it's going to be negative. But the combination of that would be good to see. CrowdStrike. So this is going to be a little tougher because of this weird spike that you have because of earnings. So you have the gap down because of another company's earnings, then you have the gap up because of CrowdStrike's earnings. I think it's going to make the idea of buying on a base a little bit more difficult. So I've thought about pulling the trigger just near the line on CrowdStrike. I guess I've been, like everybody, hoping the market would pull back and create like a little shakeout, but every day it just seems like it doesn't want to. So this is high on my watch list of names. What else is out there? This one that I've talked about previously, it sure is volatile. Goes up, goes down, goes up, goes down, goes up. It makes it really tough to hold for somebody like me if I'm trying to get size, but seems to be setting up really, really well. I like the test of the 10-week, close near the highs, volume slightly better. Now, I don't like the shape of the earnings line, but a lot of times, like Nvidia, the stock, maybe this stock is anticipating, like, let's go back to Nvidia. So if you didn't like the shape of the earnings line here, but guess what? The stock starts to move up in anticipation. And maybe I'm a little early. Maybe I ought to wait for at least a single quarter. But I'm guessing that if you look down here, you see these estimates, they're really going to ramp up in the next few quarters if they hit those targets. What else is? Oh, we could definitely got to look at like SMCI. I think this stock has topped, but I don't know. I don't know what value add that gives you. I don't have a position. I have been synthetically shorted once in a while with mixed results. Sometimes I get it good, and sometimes not so good. And that's partly probably because of the environment. All AI, market strong, et cetera, et cetera. What else is out there? Just didn't have a lot that I had. It feels like maybe the commodities trade is possibly setting up. So Southern Copper has really acted really well, but some of the others have been just kind of ho-hum. Tech, gapped up and hasn't really done a whole lot. The gold stocks they're just typical. They never go anywhere. Very, very difficult. I watch them, but just cannot get excited about them at this point. Sting, not doing anything wrong, but it's not going up either. So that I always prefer that they go up, obviously. So that's an area if oh, and maybe Val is another name. Set up this giant cup with handle. Very interesting if I go to the weekly, really large cup. So there, I watch these and I'm curious if there's going to be kind of a shift, but I think you need more evidence. Uh, AMD has not acted all that great, so it's on the 50-day while Nvidia is nowhere near. So this is very interesting action. Is the market voting that Nvidia is going to be the one? And for a while it felt like AMD would play along right with it, but quietly, gosh, 227 to 179, what's that? 20%, 21% off the highs, fairly quietly. Then you did have a new issue. What is it? Alda, is that the one? You, I should know it by heart by now already. It's ALAB. ALAB is the one. So new issue, chip, very interesting. Love to fast forward a number of weeks, see how this one plays out. I don't know much about the company, but it's in the right area. Chips and AI. Sometimes that's probably all you need to hear. And then Reddit went public too. So it's nice to see a few companies able to go public and get going. MU had a really nice report, gapped up. So there isn't a whole lot that's actionable. So that's why I think for me, anyways, it felt like a very quiet week, even though maybe it wasn't all that quiet. The Fed. I feel like there was something else, some other kind of event, but um, early in the week. But I just haven't been doing a lot. I'm trying to hold on to what I like and trying to looking for new ideas, but there aren't a whole lot, and so I haven't been doing a whole lot. I do I do like the energy area. I don't know who the players are, and the industry group is so bad, but this is a really powerful move. Look at that earnings line. And this stock is holding the gains. I do have a position in it. I was hoping it would go, feels very high tight flaggish. So you see that alert? That alert was set at down 20%. I was just going to buy the stock down 20%. Of course, it never cooperated, stopped going down, at least for now, around 165. So I had to pay up for it. But there was a good podcast with Sam Altman, the founder of ChatGPT, and or OpenAI, I should say, or I think there's a one and the same, right? I think it was the Lex Friedman podcast, and he talks about energy. Energy is, if we're going to have all these chips, like that chip that NVIDIA came out with at their recent the NVIDIA, that was it. On Monday or Tuesday, NVIDIA had their dog and pony show. That was the other major event this week. So if we're going to have these I guess one of those single chips would take like an acre of solar farm to run, and it's just going to be incredible strain on the system. So I'm trying to think, like, what's the next derivative? Not that the first derivative, the chips play, has to be over, but like, what's the second derivative of this whole chip wave, this AI wave? The first was Microsoft, Nvidia, etc., and they've all done great. SMCI, Dell Computer, and they might still continue to do great. But like, I'm always trying to think about, like, one thing I've talked about that I don't do very well is like the narrative, the story. Why should this stock go up? Why will people think that it can go up? That will help with your conviction, Because if you just use the chart, like I always was like, okay, I'll just use the chart. Well, the problem with the chart is I have tremendous conviction on coherent here, and I have 0 there, so I get out. And then I have tremendous conviction there, and then I have 0 there, so I get out. So then I have tremendous conviction there, and I have 0 here, and I get out. You see, that's the problem with the chart. And I'm just giving you a story, but some of that happened to me in coherent. Like I was trying to build a big position, and then got shaken out of some, and put on a larger position and get shaken out of it. And so if you don't know the story, it makes it really difficult to ride through the ups and downs. So I'm always trying to have that imagination of what's the narrative, what's the story. And to me, coherent, I don't know enough yet, and I want proof. I just want the stock to get above where I paid for it. Then I'll be willing to give it a little bit more room. Is that second order of where that's going to, all that power is going to come from. So that's the Sam Altman interview is interesting in that regard. All right, so let's jump to the quote of the week. Mark Douglas is the author. There's I watched on YouTube or listened on YouTube a talk he gave, and this is one of his quotes. He wrote Trading in the Zone, I think it's called, and The Disciplined Trader are his 2 key books. He may have written more than 2, but those are the 2 key ones. But I love the talk about losses. These are expenses. The edges that don't work are simply the cost of doing business to make ourselves available for the trades that do. So rather than being wrong, it's just a business expense, a lot like what Bill would talk about, the yellow dresses. Let's mark those yellow dresses down, the red dress story. Is it the red dresses that are selling and the yellows aren't? I think that's the story. I have to read How to Make Money in Stocks again. It's been a while. But we mark down the ones that aren't working and buy more of the red dresses, the ones that are. So this is a business, and that there is not a business in this world that doesn't have expenses. And so you think about every time you lose, well, that was an expense. And the nice thing about a loss is it frees up that capital, right? That edge didn't work, and it makes ourselves available for the trades that do. Not only mentally is what he's talking about here, but also the capital. You need that capital and the ones that aren't working to move into the next trade, which might work. And so that hopefully that will help with your thought process on taking losses. That should do it. 800-831-2525, MarketSurge at investors.com. Next week, Arnie and Harold will be doing their monthly webinar. So I will have next Friday off, but I'll be back to you guys on the following Friday. Have a great weekend. Thank you, everyone. Bye-bye.